The benefits of investing in equity over fixed-income securities like bonds can be boiled down to a few key things: growth potential, ownership, and dividends. Let's start with growth potential. When you invest in equities, you're essentially buying a tiny slice of a company. If that company does well, the value of your shares can increase significantly over time. This is what we're all hoping for when we buy stocks, that well-chosen rocket ship that's going to give us a 10x return and make us feel like Warren Buffett on a good day. Now, with bonds, you're lending money to a company or government, and they agree to pay you back with interest. The thing is, no matter how well the company does, you're only going to get that fixed amount of interest. Sure, it's stable and predictable, which is comforting, but it's also, well, fixed. No room for that big growth. Then there's ownership. With equities, you get to say you're an owner of the company, even if it's just a minuscule fraction. This comes with voting rights in shareholder meetings, and you get to have a say in some of the company decisions, at least in theory. Bonds don't give you any ownership. You're a lender, not an owner. Dividends are another piece of the pie. Companies that make profits may share a portion of those with shareholders through dividends. Some equities offer these little thank you payments on a regular basis. Bonds give you interest payments, which, while consistent, generally don't share in the company's increased profitability if things are going gangbusters. Now, why do people prefer equity? The main reason is that equities offer the potential for higher returns compared to bonds, especially in the long term. Think about it like this. With bonds, you're sitting back in your lawn chair, collecting interest payments, and maybe getting your initial investment back after a few years. With equities, you're potentially growing your initial investment as the company grows. Of course, with greater potential returns comes greater risk. Equity investments can be volatile. The value of your shares can go up and down with the whims of the market. Bonds, on the other hand, tend to be more stable but offer lower returns. Here in Portland, where the entrepreneurial spirit runs as strong as the Willamette River, investing in equities can feel like supporting the innovative companies that might just be the next big thing rising from our own backyard. Just remember that all this does come with a caveat. It's essential to balance potential and risk, and everyone's situation is different. Make sure you're wearing the right investment jacket for the unpredictable weather of the financial market, just like you would for a Pacific Northwest winter.